Good afternoon. I'm Jennifer Schenker, founder and co-editor-in-chief of Informilo, a magazine and website that connects business with innovation. We're here to talk about innovation in financial services. And I'd like to encourage audience participation. So please think about questions for the panelists. We'll leave some time at the end. Don't be shy. And with that, I'd like to introduce our panelists today. To my immediate right is Marta Plana. Marta has law degrees from Spain and the United States. She has worked for Microsoft, Facebook, and Google. And she is now the co-founder of Digital Origin, a company that does loans digitally to consumers, and we'll be hearing more about that shortly. Next to her is Diego Bestard, who is the founder and managing director, co-founder and managing director of Spotcap Spain, which does loans to small and medium-sized businesses, and we'll be hearing more about that shortly as well. And then we have the traditional financial services players. So we have Xavier Marin, who's representing, he's the head of Fintech at Banco Sabadell. And next to him, Kostyal, who is vice president of European listings for NASDAQ. So I'd like to kick off our panel discussion by talking a little bit about where the traditional banks are today. It's common for the banks to, especially when we talk about fintech, to think about banks as being the old dinosaurs who haven't moved. But in fact, you know, when it comes to Banco Sabadell, we know that the company has, in fact, done a lot digitally. You were among the first, and sometimes the first, to embrace new technologies, tablets, Kindles, working with Facebook, Twitter, etc. And you have now over 1 million digital customers, and that's a 41% increase over 2013. Now, you're looking to embrace innovation through different means, including via startups. So tell us a little bit about that, please.
Okay, I'll try to do it with my English, and the echo, it's not helping me to understand you. But, first of all, for all those coming from other places, welcome to Barcelona. Hope you enjoy the event and this week. And a quick introduction for you to Banco Sabadell. Banco Sabadell is the fourth largest bank in Spain with close to 3,000 branches and 26,000 employees and a total assets of 200,000 million euros. Talking about startups, that is what I think that it's needed today. We have important initiative that it's Be a Startup that I'm going to try to make a quick summary that has 3 lines of work. The first one is that we have, and this is very unique here in Spain, we are the only bank doing that, we have 88 specialized branches only to attend, I mean, not only for startups, but specialized to attend the startups with a different set of services adapted to their needs. And there is also a second line of work that is Be a Startup 10 program that has also a great success, where we invest 1 million euros per year in 10 startups. Most of them are here in the event. And we have been doing that for the last 2 years with, as I said, with a great success. To give you some numbers, the total startups help has been more than 1,000, where we financed more than 60 million euros in these 2 years. And in the Be a Startup 10 side, More than 1,500 have applied to the program, and only 19 has been with the lucky to be in the program. And this generated also a lot of jobs, more than 120, and more than 10 million euros extra funds. So this is a program with success here in Spain, and I'm sure that Be a Startup, that is also here sponsoring this event, is a well-known initiative here in Spain. And all that is due to the woman that leads that unit. It's also here, that is Yolanda Perez, that maybe it's thanks of Yolanda, all that success. And well, she will be pleased to receive all the startups at the stand we have in the event in all these days. And let me finish the introduction with another part of the Be Startup program, that is what we call innovative collaboration. This means that the bank opens the doors to the startups, and it's giving results right now after these 2 years, because when we are here today, it's like to be in family. I mean that we know all each other, and this is very different from the perspective of a bank than 2 years ago. Let me finish with an interesting, I think, a different initiative that we are starting, that is that we have a developers portal with an open API there that is just opened. We started testing that with some hackathons. We did, in fact, the first Fintech hackathon here in Spain, and we did it 2 times. And now the developers portal, it's open at developers.banksabadell.com, and it means that new companies, startups, and developers can start to develop applications using the services that the bank has exposed there. Actually, we have there the possibility to check accounts and query the credit cards, also to make transfers using these services, and to use the instant money feature, that it's something like to use the ATMs without the cars.
Okay, thank you for that overview. So let's talk a little bit about how, I mean, you've explained all the different ways that the bank is being innovative and is trying to work with startups, but banks across Europe and the United States have traditionally ignored small customers, the consumers and small and medium-sized businesses. And so startups have moved in and found this to be quite a lucrative area, and are using new digital tools to make judgments about loans. So I'd like to ask Marta and Diego to talk a little bit about how they're using big data to make loans and make a good business.
Thank you, Jennifer. First of all, to introduce myself very briefly, as Jennifer said, I'm the co-founder and general counsel of Digital Origin. We co-founded the company in London in 2011, and we're an online financial service platform. One of our products is quebueno.es, and it's small loans, B2C, business to consumer. Another product is pagamastarde.com, and that's for e-commerce shopping, basically credit cards over the phone. And we're being disruptive, we're changing the way users and consumers understand their financial market. And we try to make an opportunity out of the technology. Just for our records, the fintech investment tripled to $12 billion in 2014. So that means that fintech's happening, and it's here to stay. Basically, you were asking what it is that we do. We, through behavioral content and intelligence, artificial intelligence and big data, try to understand what the consumer aims for, and we try to give that service. we are not a threat. I hope we're not a threat for banks. I think we're here to actually make a better opportunity for different countries where we're going to be applying for, and where internet is playing a hard core on the business.
So just a quick follow-up question. And the reason the banks didn't actively pursue these customers in the past was that it was very costly, and also the default rate was high. So how long does it take you to make a decision, and what's your default?
So to make a decision to reject or accept a user, 30 seconds. To give them their credit, 15 minutes in their bank account. So basically, what technology allows you is to work faster, to be cheaper, and to be more efficient. And that's why I think technology, we're being disruptive in the market, and that's why I think technology needs to help the way we understand new products and the way we help consumers and users. And that's why I think banks can help a lot, but they need to change their behavioral and organizational charts to make those decisions quicker, faster, and cheaper. At the end of the day, users are going to be the very beneficiaries of this matter.
Diego, in our conversation part of the panel, you said that your company is able to use the bank's data better than the banks can. So can you tell us how and why?
Yeah, so just to give you a short intro on who we are. Well, my name is Diego. I'm running Spotcap Spain. And Spotcap is an alternative lender. I mean, we're in the Fintech space. And what we basically do is cover a very large, underserved part of the economic structure, I guess, which is SMEs. And what we try to do is finance SMEs through short-term financing by giving them credit lines that go up to 100,000 euros. And we use technology to do this in a matter of hours, whereas traditional lending has always taken a lot longer. And it's always been very hard for these SMEs and micro businesses to get financing. We've leveraged technology, and technology is definitely at the core of who we are and what we do. And in these debates and panels, we always speak about how technology has made everything easier. Like, a client can log in from their house or from their office. They don't have to go to an actual bank to ask for a loan. They can get the registration done in 5 to 10 minutes and get financed in an hour or two. But at the core of who Spotcap is, we do all of that. We make everything very convenient and very fast. But we also use technology to understand our clients in an absolutely different way, right? And I guess the term big data doesn't really apply. I mean, it's a term that gets thrown around quite a bit. And very few companies actually have access to big data or big data pools. What we at Spotcap do is use alternative data. And what I mean by this is built into our risk models, we created a system where we can input different points of information to actually evaluate the risk profile of that company we're trying to finance.
Sorry, you do that with information that they have with their bank, right?
Well, that's one of the things we developed. We actually developed a technology that connects to our clients' banks and pretty much reads all the information for the last 12 months of what's been coming into the account, what's going out, where it's going, the actual name of the transfers that go in and out. And using algorithms, we are able to study the flow of cash, and we're able to understand an SME in the best way to understand them, which is looking at their daily accounts and seeing what type of business they have and what their cash flow looks like. We're also able to develop different alternative points of data. For example, through preferred partnerships, we just closed a partnership with Sage, whereby through a direct connection, we can connect the Sage account and transfer all of the accounting information to our platform. That is done instantly. So all of these different points, and that's just the tip of the iceberg. I mean, in the future, we'll be able to connect so many more different points of information.
And all of that information allows you to make a quick decision on whether or not to give the loan. And how successful are you in judging how reliable, these SMEs are? Like, what's your default rate?
Well, I mean, we believe that the best way to understand a business is to look at their everyday finances. Not necessarily ask for tax returns that happened 2 years ago. I mean, most of those things in micro businesses are irrelevant. What you want to see is what their cash flow looks like. And since we do very short-term financing, so we finance credit lines up to 12 months, we are able to understand the client a lot better using the information that we ask for. in the last 18 months, so we've been around for a year and a half, we've launched in Spain, was the first country we launched in. We launched in Netherlands, we launched in Australia, and we've proven that our system absolutely works.
You're obviously doing well because you've raised about 50 million in venture capital and 31.5, I think, in the last month. So,
yeah, we announced 2 weeks ago we just closed a round for 31.5 million euros, and we're definitely going to plan to keep developing technology to make our system even faster and better for our clients, and keep the global expansion that we plan to do.
Okay, so I'd like to ask, are you guys just challengers, or could you be collaborators with the banks? How could the two sides potentially work together?
As I mentioned before, I think we're collaborators because banks have a lot of experience. So basically, we can be innovative. Being disruptive and being reimagining is extremely exhausting. So what we can add to banks is the technology and the platform that we use 24/7. And by being innovative, we kind of like integrate one another with their platforms, and our service can be of much more help to users and consumers. So I think they see us sometimes as a threat, but they also understand that we can be collaborative in many ways. Openness, innovation, and also especially being able to have to give out all that like knowledge that banks have acquired from the very past, and good investments. Startups are well invested, and then they can run in for many years afterwards. So that's basically my kind of like hint to banks.
I mean, I agree with what Marta is saying. Basically, I mean, pretty much every fintech that I know of, at least, depends on the banking system to work. So coming out here and saying we're going to disrupt banks and destroy, it doesn't make any sense, right? We got to work together. And banks, in our case, are a natural ally. I mean, the reason why there's an underserved market in the SME market that we cater to is basically because it doesn't make sense for banks to do what we do. The structures that they carry, it's just that there's too much regulation in place. They don't have the flexibility and the speed that we can provide for them, right? So a lot of times they're losing clients because they can't do the products, or they don't want to do the products we do. So there's just a natural symbiotic relationship to be had there. And I think we can definitely both learn from each other. I mean, banks are really, really good at doing certain things, and us fintechs are really, really good at doing others. And I think we can definitely work together to.
So, Xavier, do you see the bank kind of considering structuring relationships with loan companies?
Yeah, sure. At the end, we are all fintech companies, also the banks. And as I agree completely with them, with Diego and Marta, the actual scenario is very different than some years ago. And now we can see, because not only the banks, also the startups has understood that they need also the experience of the banks, as Marta was saying before. And we see that all this fintech movement is growing, and there is a lot of talent and expertise there, and we can help each other. So it's clear that it's going to produce a lot of deals in agreements in the next months, years, etc. I'm convinced.
Okay, thank you. So, of course, fintech is broader than just loans. And, one of the big buzzwords today is blockchain. So, this is where NASDAQ comes in, because NASDAQ was a pioneer, really, in terms of a traditional financial services company in doing a deal with a blockchain startup, Chain.com. Adam, you want to tell us a little bit about that?
Yeah, I can. I mean, I can take it back one step first, maybe. I mean, if you look at NASDAQ, we disrupted the exchange space because we took it from sort of floor trading, where everybody was shouting to each other, to electronic trading. So we were the first exchange in the world trading electronically equities. And then we merged with OMX in the Nordics, which was the first derivatives exchange electronically traded. So we were early adopters of technology in the fintech space. So way before the fintech terminology was there. We actually asked the founder of OMX, who invented the electronic trading of derivatives, if he wanted to be interviewed for a fintech article, and he said, Adam, I don't know what fintech means. So it's been there for a while, but we were early adopters. The other aspect of it is that we have a lot of fintech companies coming to the exchange right now. So in terms of looking at the credibility of many of these companies in this sector, I think the credibility that an IPO can provide to these companies, and also the financing in terms of the regulatory, the transparency, and the trust that it creates, the visibility, I think that's an important aspect. So we have more and more fintech players. Of course, fintech, it ranges everything from lending to payment solutions. So we had PayPal, spinning off from eBay and becoming a separate company on NASDAQ. We have many different examples of fintech companies coming to the market. And the other aspect is, of course, we launched NASDAQ Private Market, which is disrupting, in a way, the private market landscape. So if you take the company, your company here just recently, where you mentioned you raised quite a lot of capital, there is a lot of capital for private companies. NASDAQ Private Market can help those companies manage that capital, manage that equity in terms of helping them with the cap table, helping them with liquidity before they do an IPO. And that's an important aspect. So what we looked at from, and we also are providers of technology to 100 exchanges globally, or 100 marketplaces globally. So we looked at where do we want to be in the technology space in years to come. So we invested in, we made a big bet on blockchain, and we invested in a company called Chain.com. We launched a project called Link, and the whole idea of Link is really to look at the private market landscape, the issuance of a share, all the way through the way, from the issuance of the share to the settlement. And so we did a transaction, a full transaction, actually with Chain.com, their share, on blockchain, all the way from the issuance to the settlement. And what is the revolutionary aspect of that? Well, there's a lot of cost efficiency, and the cost efficiency comes in the technology, but it also comes in that it takes away a lot of the middlemen in that transaction. But you don't lose any security, you don't lose any transparency, and the efficiency is all built into that transaction. So we see that blockchain in our sector can be a very useful tool in terms of revolutionizing where we see technology. Maybe not in fast trading or high-speed trading, but more on the settlement side. That's where we're looking at it.
And I believe next up in 2016, you've announced that you will use blockchain technology to allow shareholders to vote using the Tallinn Stock Exchange.
Yes, so to the point of where blockchain can be used, my brother trades art, and you could actually use blockchain in the art business, because you can log in that, this artist created this piece of art, and then you can actually measure that, or you can follow that piece of art throughout its life cycle, wherever it moves from hand to hand. But we looked at proxy voting as an important aspect, and we used blockchain there in terms of creating more efficiency, creating more transparency, in terms of people being able to make votes in board sessions using blockchain. So again, an example of how you can use blockchain in many different ways. Typically, it's been associated with Bitcoin. We're not involved in the Bitcoin space. We're more involved in the technology and using it for different sectors.
And a good example of how traditional financial services player can work with startups. Do you see blockchain technology being used in public share trading anytime soon?
I think, I just came off a call before this panel where, of the 100 marketplaces that we serve with our current technology, the demand is huge. They want to have a roadmap when it comes to blockchain. A lot of the focus is on the settlement and clearing, which is really the management and making sure that you manage and settle and manage the issuance of the share. We're not focusing so much on the trading, because that is very much high frequency nanosecond kind of trading. But it doesn't, nothing is avoidable in terms, it's, who knows where it's going to go. But for low frequency trading, I don't think so right now. but we'll see. We'll see where it goes.
Okay, thanks. So, Xavier, let me ask you, more than 40 banks have now joined the R3 consortium that is looking at how traditional banks might use blockchain. Where does Banco Sabadell stand on this topic?
Well, first of all, congratulations for your initiative, because it's one of the first worldwide being on production environment. So it's amazing. Our position is that the market of blockchain and all that is related to this technology is really new. In fact, digital itself it's new from a historical perspective, but blockchain is just starting. So in our opinion, it's not as mature to play with in the financial system, because it's like rebooting the financial system completely, and it's a very big change. What it's going to happen maybe is that in the next years it's going to be this consortium making agreements between all the financial system, and possibly this is a way to put it in production. We started to view that blockchain as Bitcoin and all what is more related to cryptocurrencies and the business side, and now we envision all that as a piece of IT infrastructure. So in the next times, we will see. We have to compare and make the trade-off between the actual technology and this new technology, and if it works for the new technology, we will play with.
Okay, thank you. So, yeah, it's been amazing to see how in the last year and a half the banks have changed their position on Bitcoin and blockchain. A year and a half ago, either half of the banks hadn't heard of it, the other half were dismissing it. Now, some major traditional banks have actual vice presidents of blockchain. So I think that the technology is here to stay. Since we have established so far on the panel that there are a number of different ways that traditional financial services providers can collaborate with startups, let's talk about, what could be done to make it easier for the two sides to work together. Now, I know, for example, that Banco Sabadell had pushed for open APIs in Spain, and that in the UK there's a push to have a sort of global standard on open APIs. Is that something that would make it easier for a startup like yours, or are there some downsides to that?
Well, that's a good question. So where we stand now, I mean, having an open API from banks would have been excellent for us a year and a half ago when we were creating our structure. What we have done is, in the absence of an open API system where we could plug into the banks, we've developed technology to do it ourselves. So at this point, sure, it would help us because it would make everything just a lot easier. But the truth is, if that doesn't come directly from the banks, startups are going to figure out a way to get that information, and we have. So in a way, it makes sense. If I was a bank, if I was sitting in your shoes, I think it makes sense for me to create that API and control the flow of that information, rather than have a startup create their own technology that gathers that information as they see fit. So back to your question, is there a downside to it? Probably not, because we've already developed the technology that to be able to plug into these banks. And it'll help other startups, create alternative products for the market.
But if the banks are opening the APIs, aren't they determining what information you can get? And isn't that a downside?
I mean, they'd be the ones controlling the information that we're able to get or not. So in a way, we'd lose that control that we've got at the moment. But again, I mean, we've already developed the technology to be able to do it. It would have been very helpful a year and a half ago, because we would have skipped that whole development stage. But at this point, I mean, it would definitely help others, and we'd be happy to use APIs as well.
Marta, are there some parallels between like the telecom analogies of the traditional telcos and over-the-top players, and tell us, your take on a regulation of the new players.
Thank you, Jennifer. Actually, I do think, and I always state it as an example, that there are references about OTTs, over the tops, and what the telcos went through. At the time in the 80s, the telcos used to say that OTTs needed to be regulated and that they were something else. To today's date, what we know is that the incumbent, for example, in Spain, Telefonica, buys startups, and they don't develop any further than when the day they were bought. So basically, innovation is very important for startups, as they were at the time for Google and Facebook and other companies on the internet scene. I believe that fintech companies have the technology. I don't know if some of you will recall 2010, New York, fintech lab innovators still existing. That's a reference. They keep saying, at the time they kept saying that fintech companies were happening. Banks used to say, well, we'll see. We don't think they're going to be here to stay. They might be considered shadow banking. To today's day, what we know is that we're here. Technology makes our lives easier, and banks are the next ones to be kind of like disrupted by this new technology. So regulation is very important from the point of view of having equals being regulated to equals being regulated. What I mean is that telcos needed to be regulated as telcos and OTTs as OTTs. Here we're fintech, we're not banks. Banks are not fintech, are banks. So they're traditional players versus happening players. What I would say is that the government, and here in Spain we're trying to do so, Diego knows about it with the FinTech Spanish Association, to being regulated in terms of innovation, in terms of having a space as new players. We need to avoid situations like Airbnb and Uber, where they almost had to leave the country because they couldn't innovate and because other traditional players were stopping them from entering the market. So having a legal framework for FinTech companies would help us collaborate with banks and make life easier worldwide.
So you're not saying you don't want any regulation. You're saying, that you're okay with some regulation. In fact, some regulation might be necessary to give you some legitimacy in the eyes of consumers, but you don't want too much regulation.
Exactly. I'm kind of freaking out because I'm seeing some regulators right now here sitting down. But definitely, we want to be regulated. We're not scared about being regulated. And what we try every time we have like an opportunity is to state why we want to be regulated. Innovations happening. Finance and technology are being disruptive with all players, and people will feel, I personally will feel more comfortable as a user. If I hadn't co-founded this company, I would still want someone to check on my finances. So I totally understand people wanting transparency and wanted to be covered by an umbrella that will protect their finances. So basically what we're saying is, we're okay, check on us, we're here to stay, we're disruptive, we want to collaborate, so regulators come in through the door, and you'll see how we work, and you'll see why it is that we believe that we can make a change. And definitely, if that helps in Spain, in Europe, the UK is also regulating with the FCA. We can take that model and bring it here, and then worldwide make a better scenario for all those new players versus the traditional players. I think everything will work out a lot better. Technology, banking, OTTs, and telcos.
Okay. Diego, did you want to add to that?
Yeah, I'd just like to add, in our case, we're an international company from day one. So our headquarters are in Berlin. We developed our product and our service in Berlin, but we started operations in Spain. So our sector is actually not regulated here in Spain, and we've been pushing for that regulation from day one. I went to an event the other day, and I heard someone saying that with good regulation, good guys win. And I consider Spotcap good guys. I want to, have the rules on the table. I hear a lot of banks saying that there should be an even playing ground. I agree. There has to be regulation. And when they say, is there too much regulation? Well, it just has to be good regulation, right? And we don't have to invent, for example, in Spain, we don't have to make something up from scratch. We can look at the FCA, like Marta said. In Spotcap, what we've done, Absolutely voluntarily, because we didn't have to comply. We comply with the FCA. We have an FCA license of operation, and we stick to that regulation. We believe it's probably the one that's most complete.
Actually, that brings me to the fact that we also comply with FCA regulations, and we don't have to because we decided not to passport. So what we've done is we've done a good practices code, and we're trying other companies to get on board. And what we do is we copy the FCA's regulation code, we put it on our webpage, and we also ask Bank of Spain for a license. We're entidad de pago, so we have like a license to operate for e-commerce, and that's making ourselves a little bit closer to what Diego was saying. And in fact, here in Spain, you have like Red.es, or you have like the Secretary of State of Telecoms, that they're really proactive when it comes to checking what the FCA is doing, and then translate it to the government in terms of Congress, what it is that fintech companies need, and what kind of regulation would settle for users to be well protected.
Okay. Now, beyond... Oh, Adam, did you want to say
No,
something?
I think the only two reflections. One is I was thinking of my 15-year-old son 4 years from now. You know, when he gets his first account and he's going to do banking, he's definitely not going to look at banking the way I've looked at it. You know, for him, it's going to be an app. He's definitely going to look for alternative sources. He's going to feel much more comfortable in terms of what he thinks is safe banking, according to him. But of course, if it falls under the regulation, which is a must, a minimum standard, you know, to create that safety level is a must. And I think that's a credibility stamp, and that's an investment that these companies have to take on. If not, they're not going to succeed in the long run. The other aspect is that when I look at the exchange landscape, for many years, each country was a financial pool of capital which was closely locally regulated, you know, and they were fighting to keep it that way because they were afraid of foreign traders coming in and taking over that local market, you know. And the reality is that, you know, with open access, common regulation, common standards, you actually make the pie bigger, and you make that local economy thrive more by having access to more capital. So I think there's a good parallel there with regards to banking and so on, is that, you know, may the best man win, but really create a common standard, create common access, but with credibility, because we had a case just recently in Stockholm with a peer-to-peer that was lending money and went bankrupt. You know, that affects the industry, you know, and you have to make sure you're protecting the investors, you're protecting the lenders, and et cetera. So there has to be regulation, it has to be under credibility, but you have to create a common standard which is accessible for those that are playing the game in a fair way.
Absolutely. So here, Xavier, I wanted to ask you, so beyond the issue of regulation, what is holding back more collaboration with startups? Why aren't we seeing, there's some pilots, there's some discussions, but we haven't seen any, well, very many real collaborative deals between traditional banks and startups. Why is that?
Yeah, in my opinion, and based on experience, what is happening is that a lot of startups, and you have an example here, what they want is to create new experience, to use data via different ways, to manage things different, but maybe they don't want to be a bank, they don't want to be embraced with all this regulation that is needed. So, in my opinion, what is going to happen is that the banks, almost for the next years, are starting to act as a platform. So the concept of bank as a platform for me makes sense, because we are open to partnership. This is one of the best lines of Be a Startup. And this is a way to help these startups. I've been talking today with different startups that have the same problem. They don't want to be regulated. They don't want to be embraced in all this casuistic of the banks and of the traditional finance systems. But this is how is today the world. And I think that we can do a lot to help them, opening our platforms, not only technically, also like Be a Startup for business, and we are working hard in that side, because what we see is that all these thousands of startups are creating a lot of different experience, very important, and this is going to be very important for the customer. So at the end, the winners are the customers and how the industry evolves in the future, and this is our reason to be also.
I think you wanted to say something. How has, Marta, how have the banks, when you've approached banks in general, have you talked to them about collaboration? What's the general reaction?
Yes, I think, actually we've approached banks. Sometimes they just want the technology. What we're aiming for is reimagining the way banks understand technology. We really hope they build the momentum that fintech is presenting. So build a momentum, learn from mistakes, from organizational charts, like we're faster, we're cheaper, and we can bring in better technology. So banks already made collaborations in 1966 with MasterCard or with SWIFT in the 1970s. So it's not that complicated to actually understand that fintech companies can bring in a lot. And when they say that it's about regulation, I'm sorry, it's not. We've stated that several times. And that's what telcos are saying. Telcos are saying, we're not Google because of the regulator. Well, that's not exactly it. You're not Google because you're not innovating and because you have something else in your business chart to do. You're like a telco. You're not an internet company. So we don't want to be banks. We want to be fintech companies, and we have our own personality, but we just want to be able to collaborate with them to make a better field, a better playground for all of us in the financial area. So fintech is a hot ticket, and I really think that banks need to acknowledge that and to acknowledge all the positive things. And as I said, regulation or high interest rates, that's not really, well, for me, that's kind of an excuse. So what I would say is make sure we're like open to innovation, and we acknowledge what banks do for people, do acknowledge what fintech companies can do when it comes to technology and finance as well.
Did you want to add to that?
Yeah, I think there's been a fundamental change in the way fintech is viewed, and not just by banks, I guess by everyone. And it's happened not long ago. I mean, maybe in the last year, 2 years. Depends on the market where you're in, but I mean, fintech is no longer something that you look at and you say, oh, look, that's cute. You know, these companies are doing something technological and they do it fast and cheap. It's becoming clear that it's the future. It's not just something that's popping up, it's there. And the technology has already been developed, and we really are going to change the way things are done. Banking is here, they're going to be here, it's here to stay, but banking as we know it, as we've known it, like you said, is pretty much on its last few days, really. I mean, your kid, you said you have a 15-year-old kid, when he's 19, 20, he's opening an account. It's going to be completely different for him. Because he hasn't really lived the old banking days. So that's there. I think anybody you talk to, even the top banks in the world know this. And that's where the main difference has been. Now, my experience with banks has always been great. I mean, I've always been approached by different banks. And in the beginning when we launched, granted, I mean, we were brand new. So we didn't have the year and a half that we have now to prove that we actually work. But they were always very interested in how we did things. Like they would ask me, so do you really give 100,000 euros in a matter of hours? Like, how do you do it? And I would answer, look, I use your data. I ask your client to plug in their account into my platform, and I use your data using technology to study that client. And they've always been very curious to see how we were doing things. But now they're starting to be curious in how they can implement technology like ours to start evolving their systems. And I think that's the fundamental difference. Before, they just wanted to know what was going on, and now they want to know what they can do to implement these sorts of technologies.
And don't you think that's because the two sides now recognize that they need each other? Because, yes, you have the tools, but the banks have the customers. And nobody, I don't think anybody is saying that, fintechs are going to totally replace the banks. The banks are too big to go away. I think it just reinforces the notion that collaboration is becoming more and more necessary.
Absolutely. I mean, it's not even about volumes, because if you look at the volumes that we're handling in the alternative lending space, or in the different fintech verticals, they're not relevant in a market yet. I mean, if you look at the worldwide volumes, we're still doing practically nothing. But it's not even about that. It's about what's coming, and it's pretty clear. And I agree. I mean, I think we're destined to work together. It's just a matter of time before it's a fact.
I had an interesting thing happen to me just before Christmas Day. I lost my wallet, and I have 5 kids, and managing 5 days during Christmas without any credit cards or anything, I was wondering, how does that work? So I downloaded the McDonald's app to pay my hamburgers on the way up to the to skiing. I had 5 different apps that I downloaded to pay in different places. I didn't have to touch a bank. I didn't need a credit card. It was fantastic. It's amazing how, and that's the Nordics. I figure that we're a bit ahead in terms of early adoption, and we're almost moving into a cashless society. But that's one dimension of what's happening to the banking landscape. Because if you're sitting there with a lot of infrastructure in terms of banking offices, real estate, people that are sitting in these offices, manning them, if you don't even have to go there anymore, and that's a big cost. And then you have low-cost operators that are sort of managing online. It's a completely different ballgame. It's a bit like Uber and the taxi cab drivers in New York that had to pay for their medallions, and there's no underlying cost there in terms of early, adopting or moving into the market.
Yeah, no, it's amazing. This Berlin startup, number 26, they've done a deal with retail chains and I think grocery stores across Germany. So people like, say, waitresses or others who, are paid tips and things in cash, they can actually deposit cash into their online account with number 26 at the grocery store, and get automatic acceptance that the money has been put in. So it's watching the kind of workarounds of banks is quite interesting. But in order to embrace the startups, what kind of internal changes does the bank need to make? Because Marta, you touched on that a few times, that, it's about changing management, it's about changing mindset. And I think every big bank and every big corporate today acknowledges they have to bring innovation in from the outside, but it's easier said than done, right? There's no magical operating system for doing that. So what are some of the internal changes that you're making that will make it easier for you to work with startups in future?
Well, I guess that it happens to all the big companies that are in a time of digital transformation, and this is not only affecting banks, it affects all the big companies, and it needs time. I told you before that one of the things that changed in those 2 last years is that startups understood some things, and I think the big companies and banks understood their part. And internally, banks and the big companies are understanding what means digital transformation. This is so clear for the startups because, they are composed a lot of times for millennials, and also they have a small structure where things happen by a different way. I suppose that we are going to do that quickly, but it needs time, and we are working harder from the innovation departments to make the bridge between these realities, and we are changing a lot, and we are very putting a lot of effort in this aspect.
Can I say something? I like to recognize that Bank Sabadell has a very nice, innovative side in the bank that might be helping the change of behavioral decision making, way of a big company reacting to startups. So that's a very nice thing that Bank Sabadell is doing. Like Microsoft, for example, I work for Microsoft. It's a very big organization. They have a very innovative side of the company, where they try to take decision making very quickly and very much on like the top of like the seniority. Facebook, when it started, it was a startup. I'm sure that now it's like very big and it's taking longer. We were 3 people when we started. We're 90 now. So I see the way that things change. It's not easy, but I must say in favor of like Banco of Sabadell, that's something they're doing really well too.
So I just want to add something, and I think it's a very interesting discussion to be had, and it's whether banks can innovate on their own, whether they can develop these technologies and what we're doing on their own. Because banks, I mean, let's face it, they've got the resources, right? They've got all of the resources, pretty much unlimited. They're huge, right? But can they do it? Can they do it on their own? Can they develop a Spotcap like we did, 2 years ago? And if they can, why are they not doing it? And I've had this discussion with various different peers from different sectors. And my conclusion to this, and it might be totally wrong, but I think in order to be able to do that, in order to be able to innovate like that, you need to be willing to cannibalize your own company, to cannibalize your own structures. And that is very easily said and very hard to do. And I think that there lies the issue, right? Do you develop this on your own, or do you partner up with the new up-and-comers and do it in a slower way without having to, cannibalize your own structures and your own systems? And that's, I think that's where we're starting to see, banks taking decisions, right? And they're going to have to make those decisions in the next few years or months, really. I mean, in the short term.
Let me answer. I'm not sure that this is, well, I respect your opinion, but I think it's different right now. For example, in our case, we are talking with different startups to make agreements with different services where we don't feel this kind of things you told. And you know that interest rates changed a lot in the last years, also in e-commerce, for example. And well, times are changing, and I think that banks are also seeing that change. So maybe I agree with you in 1 year ago, but today I think that this is completely different, and maybe in some business units it's like you told to us, but not in all. And in the past was really this opinion shared for everybody. But well, in that conversations we are having these days, it's not happening. We are finding complementary solutions in the fintech ecosystem than where everybody wins, and obviously the customer also. Yeah.
Thank you, Xavier. I just want to take an opportunity to ask if anybody from the audience has any questions. Over here, could you please identify yourself and say who you would like to address the question to?
Yeah, my name is Graham. I work at Marta, a Swiss-based crypto financial startup delivering payment systems to African companies. So this mostly has to do with risk profiling and generating basically feasibilities to repay loans. Now, as we license our software to more and more banks, the banks are most concerned with data collection. So what alternative means could be collected in order to generate a useful risk profile for lending? They see basically when a customer has 99% of transactions done in cash, looking at the bank's records are a very narrow vertical point. So they're looking at location data, social networks, basically everything that can be tied in from the mobile device. Now, in your opinion, at what point does that information become more valuable than the lending itself? And what is the security and basically the implications of a user promising over so much data while not really knowing what happens to it on the back end?
Interesting. Who wants to tackle that?
Well, for my understanding of your question, let me say that related to the information that now the platforms, the banks, the companies have, I'm sure that in the next years what we will see is that this information are owned by the individuals. I mean by the persons. And well, this is going to solve, I guess, what you were asking for. So people is going to do what they want with their information about credit, about what they have, about what they want, about what they like, etc. From I see it in a very wide imagine picture.
Hi, my name is Julian. I work for BillPay, based in Berlin. We're a fintech doing factoring. I've heard that the panel, I would consider, agrees that fintech and banks have to cooperate. However, do you not consider that in some areas fintech have a clear advantage? Say, for instance, mobile payments or peer-to-peer payment solutions. Banks usually have very long processes, from the UX and UI sides, very complex systems, and fintech usually have much more simple solutions, and I think they have a clear advantage, but I haven't heard in this panel which areas do you think fintech can excel and have the clear advantage over banks?
Should I? Okay, so I think there's a market opportunity for all of those apps that you're mentioning, and fintech is really making that happen because, as you said, we're faster, less cost, and the opportunity is bigger. But precisely, that's why we need to collaborate. I mean, we're not saying we're banks, we're saying we're fintech companies, but because of our technology and because we're faster, we need to shake banks a little bit and say, hey, things can happen, and we're here to help you, and you can help us too. So I think that's basically what we've tried to give all the audience today, the perspective that we're not competing to one another, but that there's a market opportunity for all of us.
Yeah, and just to add, one advantage that I think we've got, fintechs, is specialization. I mean, we've got laser focus in what we do. I mean, Spotcap does credit lines up to 100,000 euros in a matter of hours. That's what we do, that's what we want to do. We don't want to go into all the other verticals. So by specializing in what you do, you try to be the best, and you have that flexibility and that nimbleness to be able to adapt your product to better serve that one purpose that you've got, which is to be the best in the market and to provide the best short-term loans. And it's very hard for a bank to do because they do so many different things, right? Changing one thing here can, affect the whole ecosystem for them.
One of the key things that drove the number of listings we had in the Nordics last year was we had 60 listings on our growth market, and the reason was that they couldn't get lending from banks. So, it took a stop there, and I think the cost for the banks to go in and try to deal with smaller transactions is too big in terms of return on revenue. So beyond the payments, the lending aspect and the costs and compliance and so on, and the regulatory barriers that are being imposed on the banks means that they can't serve the more nimble and the SMEs. So from that perspective, I think that's where peer-to-peer lending or different lending facilities popping up in fintech will be a key asset.
Thank you. Did you want to say? I think we're out of time, so I'd like to ask you all to please give a big round of applause to our panelists. Thank you very much.